Sometime near the end of 2020, I was sitting in my mate's van and he told me that he was getting into Forex and he told me that I should look into it. I was still suffering from PTSD due to my short stint in scalping stocks, but Forex was something new. Trading currencies from all over the world sounded exciting. Thus began my obsession with Forex, where I endured a few intense months of studying, backtesting and actual trading. Then just as fast as my obsession started, it had stopped. Why? Well, there were a few things that I began to realise about Forex trading, but more importantly about myself. These realisations were ultimately the reasons why I switched back to trading stocks again. Allow me to tell you why I chose to trade stocks over Forex and why I'll likely never go back. I'm completely aware that there are many successful Forex traders, and like with any other form of trading, it can be hugely profitable if you do it right. I'm not here to bash the profession of Forex trading, but I will criticise some aspects of Forex which I find confusing and some which are outright deceitful and hurtful to aspiring traders. The most obvious one is that there are too many fake gurus and scams. In Forex, the barrier to entry is so low, probably even lower than stock trading. There's tons of liquidity and you can start trading with as little as $10, £10 or whatever currency you choose. This is probably why it attracts so many new traders, and of course where there's dumb money, there are sharks feeding on them. These fake gurus aren't profitable and they almost certainly make more money from their videos and courses than they do from actual trading. Some of these people will even straight up scam you. They'll try to get you to pay for their winning signals, which often have falsified results, or they get you to join a pyramid scheme, promising guaranteed and unrealistic profits. On top of this, you'll get unregulated fake brokers who allow you to deposit money and trade, but when you want to withdraw the money, they'll become unresponsive. Now, these kinds of dubious activities also exist in stock trading, but for some reason, they're a lot more prevalent in Forex and crypto trading. If you really want to learn to trade Forex successfully, I recommend you to just study charts and price action and read books by verified traders such as The Art of Currency Trading by Brent Donnelly. Another thing that could hinder your progress is the abundance of prop firms. These companies seem to run rampant in Forex and they prey on new traders that have little to no money. Basically, they provide you with the tools and capital to help you start trading, and in return, you'll receive a share of the profits, if you make any obviously. This sounds like a brilliant idea that comes with little to no risk, since you're not risking your own money. So what's the catch? Well, before you can even begin trading with a prop firm, you have to subscribe to one of their programs. The price of this depends on which tier you choose, so if you choose a higher tier that grants you access to more capital, it will cost more. But before you get all excited, these prop firms aren't just going to hand over their money so easily. You have to pass an evaluation period first. You have to prove to them that you can be a profitable and responsible trader. Okay, that seems fairly reasonable, doesn't it? You wouldn't give money to someone that's just going to blow it all, would you? So the big question is, how do you pass the evaluation period? Now, this is where it gets dark. You have to hit profit targets while limiting your drawdowns. So if you fall foul of this, then you're essentially back to square one. Your account gets reset and you have to pay to play again. To make the game even harder, they make the rules so strict that almost all traders, even the good ones, will find it extremely difficult to pass. This is all by design, as prop firms are incentivized to keep traders losing, and those rare traders that do slip through the cracks and actually get to trade real money, the firm is still making money off them anyway. You have to beware of fake reviews and social media influencers promoting these companies because obviously they have ulterior motives. It's big business and they're not on your side. The whole world of prop firms deserves a video on its own because the rabbit hole goes deep. But I hope I've explained the essence of what these companies do. Luckily, I didn't fall for any scams or use any prop firms, but I did struggle with technical aspects of Forex, such as its unreliable volume. One of the major factors of how I became profitable trading stocks is how I interpret and utilize volume. This is impossible to implement in Forex simply because there's no centralized exchange that tracks every single transaction. Whereas in stocks, transactions are recorded on the New York Stock Exchange, the London Stock Exchange, and the Hong Kong Stock Exchange, and so on. Sure, there are various volume indicators in Forex that track some form of volume, but since there's no official source of transaction data for the currency markets, these indicators are mostly unreliable. So if you're looking to base your strategy around volume, you should probably rethink it. The next thing I came to realize is that Forex is choppy. In stocks, you do get your fair share of choppiness, but most of that can be eliminated by filtering out choppy stocks. It seemed to me that on the whole, Forex is far choppier. Sustained trends and overextended moves appear to happen less, which makes swing trading in Forex difficult. Even when a trade does occur, there's a lot of deep pullbacks that will likely take out your stop loss. Unlike stocks, it's rare that you see moves trend above a moving average for weeks or months, or parabolic moves that end with a blow off top. That's why I believe that in order to get a high risk to reward return in Forex, your entry and stop loss management needs to be precise, because the chances of getting stopped out are greater than in stable stocks. Another thing I struggled with on a personal level is that I tended to overcomplicate things. I remember when I first began learning about Forex, I binge watched a YouTube channel called NNFX, No Nonsense Forex. He convinced me that indicators were the key to success, so I spent months testing out a bunch of different indicators, trying to find the one. In hindsight, it was a massive waste of time because I overlooked more important aspects of trading, such as price action and risk management. Instead, I tried to create an overfitted system like how an algo trader would. The other thing that confused me was the amount of currency pairs there were and how they were all intertwined. Yes, things are also correlated in the stock market, but at least it's easier to find the outliers, especially when there's news that affects an individual stock. When news hits the currency markets, for example, the monthly non-farm payrolls or some political news, so many currencies are affected. If you have multiple positions on, then you could get stopped out on all of them. But I'm sure that if I were to get back into Forex now, I'd definitely find a way to simplify things, since my understanding of trading has leveled up. But that would probably never happen because ultimately I lacked the interest. This is the number one reason why I eventually shifted my focus back over to stocks. I discovered that I really didn't have a deep interest in Forex like I do for stocks, and just like with anything else in life, if you lack an interest in something, your journey is going to be much harder. In stocks, there's an interesting story behind every company. You buy their products, use their services, go into their stores. It's all tangible, whereas in Forex, it felt like I was just staring at meaningless charts. It's ironic for me to say that because I'm a trader who mostly focuses on the technicals, but I'm still aware of the fundamental drivers behind every stock and the stock market as a whole. Needless to say, a few intense months of Forex trading was enough to convince me that I just didn't belong there. If you want to get into Forex or you're already trading currencies, then don't let me stop you. Your experience might be different from mine, but the only way to find out is to go through it yourself. At the end of the day, I'm still thankful for my journey in Forex, because if it wasn't for that experience, I might not have even gotten back into trading at all. I still think that if I didn't have that conversation with my mate in his van that day, who knows what I'd be doing. That conversation reignited my interest in trading again. So to end this video, let me know in the comment section below why you prefer trading stocks or Forex. Don't forget to hit the like button and subscribe for more swing trading tips. See you in the next video.